when you go to buy a short-term rental, you're going to be dealing with a lot more volatility than you're going to with a long-term rental, because all your future bookings are based on reviews. And so you are a slave essentially to what the last person thinks of your property. And the thing is, everybody has different expectations. You can put the correct pictures and the descriptions, take care of them. But if they go in there and they don't like the vibe, or, they were thinking it's going to be a Ritz-Carlton with people walking around with platters serving them drinks, and it's a, little 1,000 square foot treehouse, and they leave you a bad review, it can hurt you.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 356. In the past 3 years, my guest today has acquired 22 rental properties, including 13 single-family homes, 7 mobile homes, and 2 short-term rentals. J.D. Sustar has also built his brand through social media as the Finance Cowboy, and he shares his knowledge to help others get their personal finances in order, invest in real estate, and reach financial independence. J.D., welcome to the show.
Hey, I'm glad to be here. Thanks for having me.
Thanks for coming on. Tell us a little bit about yourself, how you got started investing in real estate, and how you became the Financial Cowboy?
The Finance Cowboy, yep. So, a little bit about me. I am located in South Carolina, the upstate, in a little town called Anderson. I was raised here. My dad's a pastor. It's always mentioned that I didn't come from money, and, money wasn't the biggest topic around the table. Pastors just don't make that much money unless they have a very big church. So, I didn't inherit much, wasn't handed anything, but had a great upbringing. Sports was huge in my life. Baseball was all I really cared about. My goal was to play Division I baseball, and I achieved that goal playing at Charleston Southern University, met my wife, and got a job in the service industry at Cintas. And I was doing grunt work, changing floor mats and urinal cakes and delivering clean uniforms, picking up dirty uniforms. And, I realized, I don't really want to do this my entire life. And so what I really enjoyed within that service work was selling customers. And I said, you know what? I think sales is for me. I like hanging out with people and building relationships, helping them get them what they need. And so I got into pharmaceutical sales, then eventually medical sales. And that's what I do today. And somewhere along the journey, I got my finances in order. My wife and I took Dave Ramsay's class when we first got married. Dave Ramsay, everybody's got mixed emotions. He teaches some good things and other things I don't quite agree with. But I feel like he gave us a good foundation. And so we got our finances in check, got rid of all of our bad debt. And it was time to put our excess money that we were now making, because we didn't have all this debt, to work. And so it was a situation of, where are we going to put it? We're going to do index funds, stocks, ETFs, bonds, real estate. And I chose real estate. You look at history, and everybody, it seems like, who's been wealthy in the past has invested in real estate. People close to me who were doing very well invested in real estate. And so I said, you know what? I'm going to take this plunge. I had a best friend who got into it right out of college. He essentially forced me to buy my first rental, made the plunge, and I've never looked back.
Dave Ramsay, let's talk about him for a moment, because you want to make sure that people who get started investing in real estate aren't already in over their heads in debt. And I think Dave Ramsay serves a very specific and important function, which is helping people get control of their finances. What did you learn from him that helped position you to start investing in real estate?
Like you mentioned, just getting the finances in order. Real estate is a complex game. It simplifies the more you do it. But I don't encourage people, if they're struggling with credit card debt and they got a ton of consumer debt and all these student loans and all these car loans and whatever the case may be, and they're almost struggling every week or every month, you probably don't want to get into real estate. Because at some point, now I can teach people how to buy properties with other people's money. I've done it a lot of different times, but at some point, if you do it long enough, it's going to call for some of your capital. If not, then you've done a fantastic job, because throughout my journey, it's called for my capital a few times along the way. And if you're struggling financially, you can't even handle your own personal finances. Why would you want to add the stress of building on these properties on top? And so it taught me, get rid of the bad debt, and Dave, like you said, he really dials in on all of debt. We're going to disagree. I think debt on rental properties is great. I think it's a great way to leverage and build a lot of wealth. But as far as the credit cards, I had credit card debt and my wife's ring, and I got rid of student loans, and I even got rid of my cars. I don't go around preaching that. If you got a 1.9% interest rate, there's a good argument to, hold on to those and invest. But it really just helped us get our foundation set, so then we could jump into the deep end of real estate and feel confident.
When you invest in real estate and you use other people's money or you borrow money from a bank, you have a fiduciary responsibility to your investors, to your lenders. And if you can't fulfill that fiduciary responsibility to yourself and have your own finances under control, then I agree with you completely. You should not get started investing in real estate until you're able to get your own house in order. And I appreciate you sharing that with us. And I do want to hang on Dave Ramsay here because, like you said, you don't agree with him when it comes to taking debt on rental property. Why is that? And I know a lot of investors who say, well, I'm a Dave Ramsay guy. I have to own everything free and clear. What's your philosophy on that?
My philosophy as it pertains to Dave is if you were to give Dave Ramsay truth serum, he would tell you getting stable, long-term loans on a property is not the worst thing in the world. But he can't say that because if he gives that inch, his whole message just completely crumbles. So he can't do it. Now, he likes to talk about how he went bankrupt with real estate. Well, yeah, he had 90-day high interest loans out. You play around with fire long enough, you're going to get burnt. But if you can go to a bank and you can put 20% down and you can get a 30-year fixed note or a 20-year fixed note or a 20-year fixed with a 5 or 10-year balloon, the returns, the cash on cash returns are ridiculous. And as long as you're making sure and you're analyzing and you're running your numbers correctly, your cash flow is your rents are going to cover all your expenses. And then you're going to have a little bit of cash flow left over every month that's paying you back for all your down payment. And, you're able to leverage other people's money to build this huge portfolio where tenants are now paying down your debt over time. So you've put a little bit of money in. Now somebody else is paying for it. Appreciation over time. Based on history, real estate's going to go up and you're getting these tax benefits, that the government rewards us with for owning real estate, especially with notes on them. And so it just allows you to scale. Whereas if you're buying with cash, your cash flow is going to be better, but your cash on cash return is going to be garbage and it's going to be really hard to scale. And you're missing out on a lot of the benefits of leveraging other people's money.
What was it after you went through the Dave Ramsay experience that then brought you to real estate? Because it's obviously Dave Ramsay is only foundational in your experience, but what brought you to the next level, which was let's go out and acquire 25 different assets like you have today?
I will say it was hard for me to change that mindset because he really drills in you, no debt, no debt, no debt. And so I was scared of it at first, but I mentioned, earlier, I had a good buddy of mine who he's like a brother to me who got into real estate right when we got out of college. And he just, he kind of would give me, he didn't go around bragging, but I'm like his best bud. So he was giving me like these net worth updates and like this cash flow that he has coming in. And at the time he's 25, 26 and I haven't got started yet. And I'm like, holy moly. And I'm like, well, what about this debt? He's like, dude, he's like, it's not that big of a deal. He's like, it's stabilized debt. The rents are covering it. You're on 5-year balloons with fixed interest. He's like, we're not doing these short-term high interest loans. And he just kept staying on me. And I just kept seeing his success. And I was like, okay, like this makes sense. He's doing really well. He accumulated like $2 million in net worth before he was like 27 years old. And so, like I mentioned, he pretty much brought me a property in Greenville, South Carolina, because I'd been on the fence. He's like, I could buy this, but I'm giving it to you. He said, Greenville's one of the fastest growing cities in the country at the time. Investors own every house on this street and it's going to start turning over. So I'm literally handing you a gem and it was undervalued. I bought it for 68 grand, had to put like 10 to 15 in it. And I actually just sold it this year for 140. And so I doubled my money in a few years and didn't even have to get rid of the tenant or do any work. And so once I took the plunge on that first one, you just are like, okay, that wasn't scary. It's like a roller coaster. You're scared to get on a roller coaster for the first time. You do it and you're like, oh my gosh, I absolutely love this. And then it's just been off to the races.
What were some of your misgivings before you did that? What was the fear you had? Because your friend is giving you this incredible deal. Did you recognize it for what it was? What were some of the fears that you had to get over in order to say, yeah, I'm going to do it?
Yeah, I think it's the standard fears of all new investors. And I talk about this a lot, in my brand and when I'm coaching folks. It's like, I can remember to this day what that feeling, that pit in your stomach. What if they don't pay if you get a tenant in? What if you can't get a tenant in? You're having to cover the rents. What if they tear it up? What if the house burns down? All of those fears. And what that is it's emotion, and it's normal. We're humans. It's normal to have emotion, but you have to back out at some point and look at it logically. And this is where it's nice to have a mentor or, people who've done this for a long time that you can talk to and say logically, yeah, those things could happen, but the percentages are low if you're buying good real estate. People need a place to live. And so logically, it is riskier to not invest in real estate than it is to invest in real estate. Over the long term, for your financial wealth, you are causing more risk for your family and your future than not doing it. And when I was able to brainwash myself into believing that, I took the plunge. And when you're new to, we're taught to look for good homes when you're a home buyer, right? You want everything to be nice and in good condition, and you're, picking apart an inspection report. And as an investor, if you're investing like I do, you're looking for undervalued deals. And so these homes don't quite look like the home that you would necessarily live in, but that's where you get the good deals and you can do forced appreciation and make it worth more. And so just really changing those mindsets really helped. And then when you do the first deal, your mindset's kind of forced to change at that point, and you're ready to go.
How did you find the next deal and the next deal and the next deal after that?
So they've come in different ways. I have found deals off the MLS, working with an agent. They've sent them to me. I found deals me looking on Zillow. I have gotten deal. I just closed Friday on a deal that I saw on Zillow. It was listed for 130, had been sitting for 50 days. I called them, realized they needed to get out of town, offered them $90K cash and got it. Another investor could have done that, but they didn't. I just watched it on Zillow, just kept an eye on it, made my offer with private money and got it for 40,000 under asking, could fix it up and sell it for over 200 right now. So I've done deals like that. I've cold called. I have got deals through wholesalers. And then I just tell everybody I know that I invest in real estate. And so contractors, locksmith, electricians, everybody in my town knows that I invest in real estate. And I've got deals, literally a locksmith text me before, hey, I'm changing the locks on this place. They're talking about they need to sell it. The parent died who lived here. I'll get in touch with them and get it off market. So all different kinds of ways.
What's your secret power when it comes to finding these deals and taking them down?
Number one, networking. So I just mentioned like letting everybody know that I buy real estate, because it's hard to buy deals without leads. You got to have some leads some way, somehow. And then second is finding out what the seller needs. If you can find what they're trying to accomplish, why they're needing to sell, why they're in distress, if they're even in distress, then you can put an offer together that meets both of your guys' needs. And so I think that's key, is really listening to the seller. And it could vary. Like the deal I just did, they were trying to move to Michigan and they needed to get out, and they're having a free place to live in Michigan. So they didn't need to make a huge buck. And so I was able to close in 2 weeks and get them out of their bind, but another one may be just another investor wants to liquidate, and he needs some cash for another project. And so you work together and, he needs to make a buck. But he also understands that you got to buy a deal that makes sense for you, and you work deals out that way. So just knowing what the seller needs.
You don't just have one asset that you invest in. You're doing mobile homes, vacation rentals. Why the different things, and how did those come up?
Everybody invests in all different stuff. There's not a right or wrong way to do it. So I'm not here to say that. I think when people say, I only invest in multifamily or I only invest in single family, a lot of times it's clickbait or their reasoning doesn't really make sense. I don't think there's anything wrong with any of them. I really liked for us to build a foundation off of good B2C class neighborhood single family homes. 3-bed, 2-bath, 3-bed, 1.5 bath that I can convert to 3-2, brick ranch homes that I'm going to cash flow, but they're going to appreciate over time. And so that was what I was really looking for when I first started. And I still look for them today. But we had been doing it for a couple of years and we had built that strong foundation. And I felt good. I had a lot of equity, a lot of cash flow coming in. And so I got brought an opportunity with a mobile home park. Was not looking, I personally don't go around looking for mobile home parks. And it was actually a buddy of mine. And he said, hey, I know this guy who's getting rid of a mobile home park. You want to go in together? And we looked at the numbers, and the guy was willing to hold a private, a note. So seller financing. We put a little bit down and it's on a 10-year note. And the first year was interest only. So we were able to build up a lot of cash that first year, and it cash flows really well. And that was kind of why I got excited about it, as I was like, I have this foundation of these appreciating assets. If I buy these mobile home parks, these mobile homes, they're probably not going to appreciate over time. They're going to depreciate like a car, but they're going to cash flow well. And I own the land that they sit on, which is very important. If you're ever going to buy a mobile home, you want to own the land more than you actually want to own the home. It's a whole different subject. And so anyways, we did it for cash flow purposes. And same thing with the Airbnb. It's in a place that I vacation in. I was like, you know what? I come here all the time. Let me see if I can find a good deal. Found a heck of a deal on a unit. It's the ugliest house in the entire neighborhood. There's $1 million homes all around, a gated community in Charleston, South Carolina. And I got this house for $185,000, and it rents, I cash flow almost $1,000 a month, and it's worth, $430,000 now. So, just decided to branch out. But I still, to this day, the house I just bought, C-class neighborhood, 3-bed, 2-bath, brick ranch, long-term rental. So that's kind of the foundation. But, I wanted to branch out a little bit.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com.
With all this branching out and the different assets that you're investing in and having success in, what are some of the pitfalls or the challenges that you faced in building your portfolio?
I would say with the long-term rentals, it's been pretty easy. Just generally, it's easy to get lending on, long-term rentals if they're single-family homes. There's people always looking for a place to live. So generally, it's been a smooth process. I can't say that it's been any issues there. On the flip side, one of the biggest adjustments with breaking into the short-term rental market is you have to understand when you go to buy a short-term rental, you're going to be dealing with a lot more volatility than you're going to with a long-term rental, because all your future bookings are based on reviews. And so you are a slave essentially to what the last person thinks of your property. And the thing is, everybody has different expectations. You can put the correct pictures and the descriptions, take care of them. But if they go in there and they don't like the vibe, or, they were thinking it's going to be a Ritz-Carlton with people walking around with platters serving them drinks, and it's a, little 1,000 square foot tree house, and they leave you a bad review, it can hurt you. And then you look at something like COVID, where they shut down travel. Nobody's going to short-term rentals. Nobody's vacationing. And so there's just a lot more volatility in it, a lot more people coming in and out. And, I learned the cash flow is good there. Cash flow is very good, but, you have to weigh, like, is the headache worth it, or should I just exit and go do something else? So that's been one of the challenges with the Airbnb market.
So it sounds like you're struggling to decide if that's a market you want to stay in.
Exactly. And we've got it down. We've got everything automated, and if you follow anybody who teaches Airbnb, they make it seem a lot easier than it is. I've been doing this for, over 3, almost 4 years now in the Airbnb space, and you can automate a lot. I mean, I automate everything you can possibly automate, but you can't automate when somebody texts you and says, hey, where's the closest restaurant? Hey, do you have bikes? Hey, do you have this? And although all that stuff's in the description, if they don't read it and they want to ask you a question, you have to answer. And so it's really hands-on, and there's just a lot of benefits. That's why it keeps me there, is because the cash flow is so good and the appreciation is so good, because you're usually buying in a better market. I mean, you think about it, a short-term rental is going to be located in general in a better market than a lot of these long-term. So there are the benefits. But I'm just at the stage of my life. I got 3 little ones, another one on the way, involved in my kids' sports, church. I'm like, do we want to deal with a headache anymore? Or do we just cut our losses, make a good profit on it and then go invest it somewhere else?
So where is that somewhere else? What are you focusing on now going into the future?
So right now I'm still focusing on my bread and butter, the long-term rental, single family homes, the 3-bed, 2-bath, 2-bed, 2-bath, nice homes. That's where I'm at right now. I can see a future to where I start doing bigger deals where we're doing the larger multifamily or the larger portfolio deals because I now have access to a lot of folks with the brand that I've built with Finance Cowboy. There's a lot of people who want to invest with me. I can see that infrastructure getting built out. One of my best friends, they manage a real estate fund. They do a lot of syndications. So they already have the systems and processes in place. And so I can see there may be potential to partner there and help other people get into deals in that capacity later. But for me personally, right now, I'm still focusing on my bread and butter.
And let's talk about Finance Cowboy and the branding that you've put in place. By the Finance Cowboy, and what are you trying to achieve through that branding? And I know you do a lot of YouTube videos. You have a strong presence on social media. Talk about all that and the bigger thought process that goes behind it.
I think I have to give the backstory for any of it to make sense because it was done out of spite, pretty much. I have a family member, highly educated. They are like high up in one of the largest hospital systems in the U.S., one of the most prestigious. They're older than me. They're very, very, very successful in what they do, but they're very conservative. And so I'm more of a wild card. I'm younger than them. I'm just a little more blue collar, but I have been investing in real estate for years and I've grown a lot of wealth off of it. And so I keep telling this person for years, hey, you need to get in. Like, I'll buy a property with you. And they just kind of would blow me off. Yeah, I don't know if JD knows what he's talking about. And so finally, I just gave up. And so a year ago in June, this family member started sending me text from a 26-year-old personality on Instagram who had like 35,000 followers who was teaching people to invest in index funds. And so now this family member of mine is messaging me, telling me that I need to invest in index funds because this 26-year-old on Instagram with the following says so. And he had started investing. I was like, thank God he's investing. But it hit me. I was like, holy crap. Like, because this guy has a following, he's created himself as an authority in his space. And he is just convinced a highly educated man in my family to finally start investing in something because of his authority. And I was like, you know what? I have a lot of experience. It's relatively, let's not get that carried away. But like, I've done a lot of deals. I've done sales. I can talk about sales. I can talk about personal finances. We've cleaned ours up. And so I launched it in July of 2021. And I actually launched it under the name, The Million by 30 Coach, because we had become millionaires before the age of 30. And I was like, that's kind of catchy. And I was like, yeah, that's kind of too niche. I'm going to lose everybody who's over 30. And I just kept thinking of a different name over and over. And I was putting my boots on one day and I was like, Finance Cowboy. And it stuck. I was like, I think that's pretty good branding. I'm not a marketing genius, but I think I can roll with that. And so I really started talking about personal finance in general to start and, didn't really have a direction for it other than I just wanted to get out there and see what it was like. And it was interesting. I started posting about my deals, real estate deals that I had done and that I was doing. And the market itself pushed me to more real estate content. And so the people following me were literally commenting, and I didn't have but 500 or 1,000 followers at the time. They're like, we want to see more real estate content. Like, how are you buying these real estate deals? And I was like, okay, well, I need to go all in on this. And so my message since then has essentially been, how do I teach the everyday person, the person who's working a job, they got a family, whatever the case may be, to buy real estate? And, I've just been consistent. I've shown up every day, posting at least one video, sometimes 2, sometimes 3. We grew from 0 followers in July 2021. We're at 75,000 now, and we're about to launch, our mentorship program, and we got a lot of free resources. And I just get to help people. It is really awesome because you probably get a lot as well. Questions, things in the real estate world that seem real simple to us who've been doing it for a while. It's like a foreign language to most people, cash on cash return, cash flow. I get so many messages, people thinking that cash flow is just rent minus mortgage. And I'm like, no. You're going to buy a lot of bad deals doing that. And so I'm able to walk these people through how to do this, do it correctly, and set yourself up for long-term success. And I absolutely enjoy it.
Talk about the commitment there behind Finance Cowboy, like to post every day, to always have content, new, fresh content that you're putting out. How do you manage that?
I didn't know what I was getting into when I started. I'll say that much. I have the tendency to do that. We got a great idea. Let's go for it. And then I was like, as it started becoming a viable business as it is today, there's a lot of opportunity there. It was like, all right, I need to take a step back and we got to get some systems and processes in place. And so I would wake up and create a piece of content that day, and it would take forever, whether I'm typing out a Twitter thread and posting it on Instagram, I'm doing a video, making a graphic, and it just took up a lot of my time. And there's little tricks to growing, commenting on different accounts and this and that. And so for the first, I would say, 8-9 months, I spent a lot of time per day. Hours per day with content engagement. Since then, I've built a little team around me and I've gotten smart. I batch all my videos now. So I try to shoot somewhere between 30 and 60 for the month. And so I shoot them in one day. I'll spend about 5 to 6 hours and I'll shoot 30 to 60 videos. And then I send them to an editor. They do all the putting the audio together with the video. And then I hired on an intern from the local college to do all the posting for me. And so I've able to been, take a deep breath so I can think, get back on track and say, okay, where do we want to take this brand? I can now work on the coaching program, getting all that built out. Batching, to answer your question, has been huge for me to be able to do this consistently without being overwhelmed.
Batching, but you still have to come up with the 30 to 60 pieces of content. So how are you managing that?
There's a couple different things I'll do. So I will look at previous posts I've done that performed well. Easy hack is looking in the comments in my messages. What are people asking me about the most? And then really breaking that down. And you can break, one question down into 3 different videos, just answering them different ways or digging in a little more. And then I'll also look just in the overall, finance, real estate, wealth, success space and see what other people are posting. And I'll repurpose whatever their theme is. And I'll do it, so somebody may be posting about budgeting, but the way they structured in the tone of their message, whether it be verbal or written, I'll take that and I'll put it into my words, for whatever I'm talking about with real estate. And so then I'll write all these topics out, what I want to cover. And then I don't write a full script. I'm not there yet. When we got a full marketing team and all, and a content director, I'll probably get there. But I do spend a lot of time thinking about my first 3 to 7 seconds of each video. And so I write out my hook, and it sounds gimmicky, and I hate doing it because I have to say something kind of silly at the beginning, to draw people in, but I'm doing a disservice to my followers and everybody who runs into me if I don't say something that draws them in, because then if I'm boring, they're going to swipe through and they're going to miss the good information that I'm actually about to give them after I draw them in. So it's quite a game.
What's your favorite hack or app?
With real estate or just in general?
Both.
There's 2 that I like for real estate. I like PropStream. I'm able to pull a ton of data from PropStream to go and find sellers. It's been super helpful for me, especially if I'm going on a cold call campaign. And then for my short-term rentals, I like the AirDNA. It's a great app that I use, and it gives you all the data for a particular area. So you're going to know, what you can get for rent, what your occupancy rate is going to be. That way you can, see if it's going to be a good deal or not. And then, my biggest hack, I don't know if this counts. It's kind of a lame answer, but I'm stunned on this one. I don't know what to say. But I have a 19-point checklist that I put together that I use for every property. And so it's like just an easy hack for me to be able to look and say, okay, I've gone through all of these. I've made note of, what are the utilities going to be? What's the mortgage? What's the insurance? What's the taxes? What's my interest rate? All of that. That way I don't miss anything when I'm analyzing a property, because I'm big on analyzing properties and making sure that your numbers are right before you jump in. So
how would people find out more about you or get a hold of you?
Instagram is where I'm at mainly. So at Finance Cowboy on Instagram, that's where I do the majority of my content. And then I'll repurpose it and put it on TikTok. So if you're mainly on TikTok, at the Finance Cowboy. And then you can find me on YouTube at Finance Cowboy, and then also financecowboy.com.
JD, thanks so much for coming on the show, talking about getting started in real estate, leveraging the help you were able to get from Dave Ramsay, but yet go beyond his advice and start taking on the single family profile that you look for, the mobile homes, and then the vacation rentals. It's been interesting hearing you talk about that. And I especially appreciate you talking about building your brand and your identity as the Finance Cowboy. Thanks so much for coming on the show and sharing it with us.
Thanks for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.